Hi everybody, Tim Knight here, Slope of Hope. A couple of items to start with. One, I mentioned yesterday that I tidied up the ads on the site a bit. I know that there was an ad in the upper right corner that blocked some content for people with smaller screens, so I've gotten rid of that and moved things around a bit just so they were less obtrusive. But as always, if you ever see anything of interest, do click on it because that's how Slope makes its nickels and dimes. Other item, if my voice doesn't sound as effervescent as usual, I'm just pretty bummed these days. 2 years of this market has really kind of worn my spirit down to a nub, and just not feeling so great. But even though I didn't have a heck of a lot to say, I wanted to thumb through just a few charts here, say a few things. As you can see, we've got yet another recovery high has taken place pretty much across the board. In fact, in some indexes, it's lifetime, human history highs, which is pretty amazing. And I thought we'd just look at a few very long-term charts here in this brief video. We'll start off with the Dow Jones Industrial Average, which we got going back 111 years on this one, so it takes a moment to load. Just trying to get the big picture in the midst of all this. Looking back here, the kind of market that I had thought we were going to be in was along these lines, kind of circling very huge recovery and then kind of a choppy bear market for a number of years. Will that happen? I don't know. Obviously there's reason for doubt at this point because things have been so strong. I still have my little Fibonacci fans here with a kind of 6,000-ish type target for the Dow, but it would really, something very big is going to have to happen for the market to really make that kind of move at this point, because this entire thing is just, it's massive and it seems to be unabating. But anyway, this is the big picture on the Dow, and one thing I noted with some chagrin is that this Fibonacci back in April, it obeyed it beautifully, almost to the point, and it backed sharply away from that, and it cut through it this time like a hot knife through butter, and that's what's a little distressing, that so many formerly important technical levels aren't getting kind of Rodney Dangerfield style any respect anymore. I mentioned lifetime highs on some indexes. The mid cap is an example of this, the S&P 400 mid cap. Just amazing here. I've got a Fibonacci ARCs on this one, which had contained prices on the ascent for many years. And again, prices have just sort of shrugged it off and poked right through what had formerly been kind of an important technical level. The Russell is not at a lifetime high, but it's definitely way up there. And so as we look at this, we can see, even considering this arc, there's definitely a little more room to run here, because at this point there's nothing from a technical sense breaking down or slowing down about this. Just about the only index which is showing any signs of weakness at all is the Dow Jones Utilities Index, which is probably has a lot more to do with the rising rates than anything else. And the util is kind of a fascinating graph, but as we zoom in on this, you can see it's still substantially below its lifetime highs. And this level here, 416.47, has held fast ever since the bear market kind of took hold. So the utilities actually managed to be down 1/100% today. The utilities are just about the only areas showing any sort of weakness, and the reason, as I said earlier, isn't too surprising. Interest rates continue to heat up. I had drawn this line in a posting yesterday. This was violated today, so the interest rates look like they may have changed from a huge multi-decade downtrend up to into an uptrend at this point, because we've got our first higher low at this time. So if the break of this line is real, then we could see that continue to kind of march forward, mushing down TLT even farther. Looking at a big ETF, the diamonds here, DIA, we can look at this wedge, and even the wedge, which had been respected for quite a few months since Jackson Hole speech, that was violated to the upside today. So even patterns such as this are not enough to contain the buying power. And as far as Forex goes, the euro continues to be strong until such time as that rolls over. The bears continue to really not have a chance. It had tumbled quite a bit from November of last year down until the beginning of this year, and it's had sort of this resurgence. I'm not watching that as closely as before because it just doesn't seem to be playing into the equity markets as much as it used to. And finally, closing with the precious metals. These I have a small short in GLD right now. GDX's strength was a little unsettling. This line here kind of represents an important line in the sand. If GDX continues to power higher and cross that line, then that's pretty bullish because there's not very much holding GDX back until it gets way up here to a new high. GLD is not quite as powerful looking. It had about half the gain of GDX today, and it's just right at this broken trend line right here. So if it's going to reverse, it better reverse pretty much right away. And finally, silver, which had a very strong up day. Again, if it pushes much higher, it's really going to be kind of into no man's land / who knows how high it'll go. If it is going to weaken again, it really can't get past this $30 level here. So anyway, I am very light right now in my portfolio, only 40% invested, which is very light for me. I've got a split of longs and shorts, but yeah, things aren't going so well so far, so kind of bumming. But that's why I'm light. Got to kind of take the foot off the pedal and wait to see how things unfold. So hope you're having a better time and a day than old Gloomy Gus here. And I will see you on Wednesday. Bye-bye.